So the homepage of the site says, learn from the best in luxury real estate. So this is a B2B business, at least from my first interpretation of it. Talk about the origination of Estate Media and the general thesis about the business.
Yeah, so I would say the website actually, and we can dive into this, is probably not a good representation of what we actually do. So the thesis for the business, I had met these celebrity real estate agents, and this was around the time just coming out of COVID. As you've probably seen, every real estate agent, either before that, but absolutely after COVID, right? There was an acceleration, and every brokerage leader saying you need to be a content creator, right? Overnight, you could say social media is the new like park bench for a real estate agent. So you had both the top producers, people that were already known, but every agent in America trying to create content. What I saw at the highest levels was these top agents are spending anywhere from $50,000 to $200,000 on content a year, right? That's marketing, that is listing videos, that is thought leadership content. But again, it was a marketing write-off. And my idea from a very high level was if we can flip that model, right, and create content both for the industry, but also for general consumers in a far more cost-efficient way than they've done on television. These agents, again, most of them did not like making that content, right? It was a have to. It was not a want to. And I said, if I can flip that into a want to and flip the entire model where we are handling the cost of production, we're making better content, right? Both for us and for the agents. And we're actually able to turn that cost center into a revenue generating vehicle, right? Through sponsorships. That's a very hard thing for top talent to say no to. Now, I would say the biggest challenge within that was all of these top agents, both within cities and nationally, generally didn't want to be part of an ecosystem with one another, right? Many of them are competing for listings, both within, let's say, LA, but also across the country. And so the hardest point from the start was, hey, we're going to do this. We're going to create original content around you, whether that is an original series, a podcast, a newsletter, social content. And within that, this entire ecosystem is going to grow, right? So let's take everyone essentially, if you look at Ryan Serhant, right, who many people know.
Here in New York especially, right?
In New York, but now just launched in Los Angeles, right? His approach was let's build a modern brokerage that has media, that has technology, and has education. I said, if we can take all the top agents outside of Ryan Serhant, bring them into one ecosystem that is agnostic from your brokerage, that's an incredibly powerful vehicle, both for the industry, right? Because agents looked up to all these people who are now part of Estate Media, but also more generally, right? I think the reality television format is stale. It's very derivative. It's been the same thing for now 25 years. And the networks, the studios continue to make that same format, right? There was appetite for it. But that was the kind of high-level thesis of the business, right? Let's build this media company that is both B2B and B2C. And what you saw on the B2B side was the traditional publishers, right? You had Inman that was generally covering residential. You have The Real Deal that was generally covering commercial. And then you had Housing Wire, who was generally covering mortgage. On the other side, you had the reality television. And there was nothing in between. So that was really the starting point where I saw an opportunity from day one. And obviously it's grown, right, from that. But that was the core thesis that remains true today.
And so what kind of content are these creator agents making?
Yeah, so we have two distinct sides of the business. We have our agent-focused business, right, which we call Estate Elite Agents, and then our more general, Estate Media. Now, these agents are creating anything from on the B2B side, right? We have the two biggest residential real estate podcasts today, right? Thought leadership content around residential real estate, how to be a better agent, behind the scenes, going back to their lives, right? We have numerous original series that cater directly towards realtors. On the other side of the business, it's anything in or around real estate as pop culture. That could be celebrity homes, that could be mega mansions, that could be trends in the industry that are relevant to home buyers, to sellers. That's even now moved into, we have an asset with your previous employer of Morning Brew, right? Which is, Devin and I will say, kind of the 202 of real estate investing, right? Getting into Airbnbs, they might not know what a REIT is, et cetera. And so we've built now this ecosystem that, again, I would say half the focus is on B2B, half is on B2C. And I'm sure you have thoughts, right, or questions around that. But in our industry, the B2C side actually fuels the B2B side quite well, right? We're able to market our agents' listings. We're able to get more eyeballs on those listings, which lead to more buyers, which lead to more sellers, and ultimately lift them up, right? And so this ecosystem has become very sticky for our agents, not only from content creation, but for their core business of real estate, right? Where they obviously make far more money.
So the thesis at the start, to kind of echo it back, was you have these agents, they make content, but they don't love making content just because they have to do it the same way anyone has to do marketing for their business.
Yeah.
I can understand the consumer content because that drives more eyeballs to the listings that they're doing, that therefore drives, new deals, generates them more revenue. But why did some of these agents decide to go on the B2B side, which is really not driving new listings or new revenue from a real estate perspective, but it's teaching other agents how to do things? So is it that you just identified that there were some agents that loved content, or the money was so good on the B2B side for them that they were like, you know what, we don't love content, but we're the best damn agents in the country. We can make a lot teaching others how to be like us.
Yeah, so I don't think it's a singular answer for all agents, right? But I think at the end of the day, these agents who are very successful in their careers, there is a desire to give back to the industry, right? Part of that is I want to share how I got to this point, number one. Number two, though, is all of these top agents have anywhere from, let's say, 50 to 400,000 agents who follow them, right? And so part of their brand outside of just lifestyle, right? I live this lifestyle, as you've seen on the TV shows. I'm selling a lot of real estate, but that helps them not just for other agents, right, who they might do business with, but if a potential client comes in and sees that this person is highly articulate, they get to understand their backstory. They're seeing them on their feed. There's this idea that has proven true that like social media is not just to get new business. It's also to continue to engage with past clients. Now, that could be newsletters, that could be weekly updates, it could be monthly updates, right? But how are you fostering, let's say, your CRM on the back end? If you continue to see this agent who you potentially worked with in the past, and they are sharing what's going on in the market today, where are interest rates, et cetera, that also establishes them as a thought leader that you want to come back and work for, right? And work with. And so that's also part of it. Now, I would say our core B2B assets, the podcasts and newsletters, are around agents who I would say very much have that lane, right? And want to be either seen as thought leaders in the space or already were, but weren't necessarily making that content, right? They didn't see the clear ROI. They didn't have the time. And so we solve those two questions, right? And problems for them.
Have you found that there are any challenges trying to build a B2B and B2C business at the same time?
Absolutely. I mean, I think from day one, we took this approach. And look, I have many arguments with folks that we both know, right, around following the singular asset path of a morning brew, right? I remember Cody Sanchez saying, you need one podcast, you need one newsletter, you need one original series. This isn't going to work. But I just saw in the industry, it's very different, right? The B2B and B2C sides of things are very interwoven. Now, I could have taken the approach of we're going to do a pure play B2B business here. What I fundamentally believe, even to this day, is that a pure B2B business for real estate agents on the advertising side is capped.
Okay.
This is not commercial real estate. You don't have people who are spending $10,000 for events, right? You have a prop tech industry that when I started the business was doing very well. Today is highly challenged, right? By AI, by Claude, et cetera. That the big AI companies are essentially creating the products, right? That have been around for 10 to 15 years. And I also saw the traditional publishers in the space, right? And understood their revenue. And I said, if I want to build a business that is bigger than, let's say, 15 million a year in revenue, I can't just have a B2B business in this space, right? Also, what I'll say, though, is many of our top personalities, many of whom are on TV or built large social followings, inherently had large consumer scale. And simply focusing on the B2B, again, I took a personality-driven approach in this business, was highly reductive to who these people were and the brands they had. Now, challenges, absolutely, I would say from an internal perspective of where do we allocate resources, right? And early in the business, I would say our focus was skewed probably 75-25 to B2B. That shifted over the past 18 months. Part of that is where the audience is, right? There's obviously a bigger audience in the consumer side of the business. It's also where the dollars are. But we're also seeing that this B2C side of the business now is really fueling, right, the B2B side of the business. But still to this date, it's the allocation of internal resources, right? Of if we have 100 hours, right? Are we spending 50-50? Are we spending 70-30? But that skew, especially I would say in the past 12 months, has moved from probably 75-25 B2B to 65-35 B2C.
And is that driven by where you see the revenue right now? Is that driven by where the audience is kind of popping up? Like what, as the CEO, kind of what gives you the confidence that, okay, let's invert and now go after more consumer rather than B2B, whereas 18 months ago, it was more B2B to consumer?
Yeah, so day one, my goal was to build the trust of the industry, right? People didn't know who we were, but they knew who our talent were. And so I took a very strategic path of truly on social media, we're going to collab with all of these big agents. And I'm purposefully going to build this brand with a degree of mystique that agents came and said, these are all the top agents in America, whether it's sales volume, whether it's, hey, they're the biggest in social media, et cetera, and build that. How are people working with them? What is this thing, right? But what agents did know is all of the agents they looked up to, and the number one in every major city was on this platform, so I should pay attention. We had to get to a point where both leaders in the industry and also agents respected us. They came to us, right? And they knew who we were. So to build that groundwork was really the focus over the first 2 years. Now, my job, I see it as that, where are the dollars and where is the audience? Obviously, I knew from day one, if we were successful on the consumer side, engagement's going to be there, right? The numbers are always going to be bigger. But the dollars, I would say, especially in a relatively challenged real estate market, that's absolutely a big part of it. Right now, if interest rates get cut, if we see the market get frothy again, that B2B advertising segment is going to be much bigger. But I also started this business in potentially the worst residential real estate market since the financial crisis. So I could only go up, right? But I knew at that point that I can't have my business be contingent on interest rates, right? And the Federal Reserve, that was not a good way to build a bulletproof business. So that's how I look at it today.
Your founder, Josh, has used this line, quote, we're what Magnolia Network did for lifestyle, but for real estate. Kind of pull that apart. What does that mean? What did you see with Magnolia Network that you kind of are trying to emulate?
Yeah, so I think that comes from kind of the early days of how I looked at this, right? I had a few companies that I thought did a very good job. Magnolia was one. You could take Epic Gardening in a way too, right? Let's build around this niche that has a highly dedicated audience, right? We'll create content. We'll bring together these big personalities. And then off of that, right, you have a great advertising business. You can have multiple revenue lines within that, right? That was my day one of this is the type of business I want to build. I think if you look at Magnolia, now the difference between them and us, very honestly, is they had a show that was highly successful, right? That then spawned the entire universe of being able to bring in other talent. Obviously, now they have massive consumer product lines. It's $1 billion business, right? For us, it was not, hey, a show birthed our celebrity, right? I think Josh's view in that too is I have had this highly successful real estate show. I want to take that, broaden the envelope, bring in other talent, and then create this media ecosystem that can look like Magnolia Networks, right? Today now, I don't want to build a television or traditional driven vehicle, right? We are not going to build a massive consumer product line for the masses. That's not our business. But again, I saw this business very much as how do you build content that fuels an ecosystem. Now, I think that ecosystem in my mind has changed from day one, right? I think when I started, I said this could be a very good events business. This could be an education business. This could be potentially down the line, right, a technology business, as you heard Jason say, right? You spend time, you build this media ecosystem, you lessen your reliance on advertising dollars and you bring that in-house. You have all the data of who your audience is. You've worked with advertisers, you know what works, what doesn't work, where the needs are. And we can dive into that a little bit. But my view has very much changed, I think, from day one and when he said that to now, right?
So you said you would never launch like a consumer products business, or probably wouldn't launch that, whereas Magnolia built a big part of their business there. But as a consumer audience, isn't there an opportunity to build that sort of a consumer product business? Could you come out with your own line of home painting or, you know, something along those lines, you know, the estate media line of paint or the estate media, we just bought patio furniture today. So, you know,
staging, et cetera. I think down the line, yes, we're not at that point, right? And look, I think founders in media, and I have seen this pressure as well, right? Even from venture capitalists, et cetera, that say, hey, you have the biggest audience of real estate agents in the country.
Yep.
Launch a technology business. And
aren't you glad you didn't do that with AI?
Very much so, right? But I would say there was that pressure. I mean, we had the opportunity to raise way more money at a massive valuation about 12 months ago to launch a technology business, right, for real estate agents. And I knew we are not close to having what I see as a bulletproof, incredible media business. We're not there, right? And I didn't want to go there yet. I think I look at Jason, have a lot of respect, right? That it takes time to build a really great media business.
To qualify, we're talking Jason Yanowitz from Blockworks.
Yes,
yeah, okay.
Jason, right? And I think he built his media business for 7 or 8 years, right?
Yeah,
before he then built a data business. We're in year 3 right now. And I think being premature in that and shifting your audience purely into an owned and operated product can kill you before you even have time to reach who you can be, right, as a media business. So yes, I do very much see that there are going to be iterations of this, right? Consumer products, sure, could be one, right, on the B2C audience. We did just launch a video game with Zillow Gone Wild, right? You could say that's a separate business, right, around this. We will be opportunistic. But I would say a big play, whether it's on the consumer side, the technology side, we're not there yet. Now, I have many ideas. I've even done the research and tested things out, right? But I'm not comfortable doing that. I don't think we are there yet.
Yeah, the founders that I see have the most success have the discipline to not prematurely launch into new things or deviate from the business model that they're working through.
Yeah.
I think the one I respect the absolute most is Sean Griffey from Industry Dive.
Yeah.
Built a $500 million business ultimately when he sold to Informa, doing the same thing every single time, over and over. So, you can't fault that strategy.
And I think it becomes this question of are you a seller or a buyer in B2B media, right? And I think you hit this inflection point where you are a highly strategic asset, right, for one of these companies in the space. And if you want to be a seller and you move too early in launching a technology business, you could eliminate that crop of potential buyers, right, that see the value in the media business. Though I think if you want to be a buyer down the line, right, or a builder, you have to make that decision. But we're not, again, we're too early in the company to make that decision today. And I'm not focused on either of those outcomes. I'm going to put my head down and continue to build this business. And as we grow, again, be open to both of those things.
So you've said in interviews that you reach more than a third of all realtors in the U.S.
Yeah.
And that might have changed since the last time you kind of gave an interview, which is, I think, roughly like 500,000 people out of a total 1.5 million possible brokers.
Yep.
How are you measuring that?
Yep. So it's about 750,000 today, right? And let me break that down, though. That is of our owned and operated audience. Now, if you take all of our talent, we work with 30 of, I'll say, the 37 biggest agents in America right now. You probably reach almost all of them that are actually on social media, right? You have about 1.5 million agents who are part of the National Association of Realtors. That is, you are a realtor. You can be a real estate agent without being a realtor, right? So they're about 1.5 million. Hobbyists, people that are not part of the association, probably around another million, right? So you're looking at around 2.5, though this is obviously a business that is guided by the Pareto principle, but even more accentuated. Probably 10% are doing 90% of the business.
Right. You got one person who might sell one house every 2 years, but still calls themselves a real estate agent.
100%. So, look, we have 6 newsletters today that reach about 500,000 people. So we can do polling. We understand who those people are. We also have built out with a partner a social intelligence tool today. So we can look at all of our social accounts and owned and operated. And what that tool does, it's purely internal, is it takes obviously our Instagram following, it pulls those names. We then triangulate that with real estate data. We understand what markets they're in. We understand what brokerage they are with. So we can go on the back end today across all of our Instagram channels, and we can look at how many agents do we have. We can actually tie sales volume, which is all publicly available. Now, that's incredibly valuable for us to understand our audience. It's also incredibly valuable for our advertisers, right? And so we can even go and triangulate of our non-real estate audience, who owns a home, when did they buy, and what was their interest rate, right? This is all publicly available data. So we are growing in a way a very valuable data business underneath all of this, right? That today is internal and in some ways for our advertising partners. But so we again, the newsletter side, we do polling on our social media, but then it's the social intelligence tool that really tells us not only how many agents do we reach, but who they are, right? So that's how we get to that number today.
The B2B, B2C conversation, are there different platforms that play different roles for distribution depending on that B2B versus B2C topic?
Yeah. So, I mean, from day one, and you brought up the website, right? I was like, we're going to take a decentralized approach. I saw moving forward publishers, right, in our space and everywhere are going to be challenged, right, with AI, et cetera. And I took the approach of, I already saw it 3 years ago of slop content being created right across the board. I saw the barrier to entry getting lower. And so I said personalities need to be at the core of this, right? We're not going to build a brand that is a state media that is built upon us, right? That is not featuring top talent in the space. Now, that was my idea from day one. Now it's changed a bit, right? We've built our brand to a point where we are known independent of our talent, and we are bigger than any one of our talent, right? That was the goal from day one. But on the B2C side, yes, I would say, I mean, Instagram, YouTube, that content plays incredibly well. Now, we also own and exclusively partner with many of the largest social accounts and content creators in what I'll call the real estate entertainment realm, right? And so that collection of assets is around 20 million followers, right? So YouTube, Instagram, predominant platforms. I would say TikTok less so. On the B2B side, Instagram today is still our better platform, right, and our biggest. And then the newsletter business, I would say on the B2B side, right, and podcasts are also a driver. We do not have newsletters that are anchored towards the B2C side, or the B2B, excuse me. No, B2C side of the business. We don't use TikTok for the B2B side of the business, right? We don't even really use X for the B2B side of the business. Real estate agents as a group are most active on Facebook and Instagram, right? It was Facebook until about last year, where Instagram became the predominant platform. So
and that's because of the visual nature of real estate.
Visual nature, absolutely, but also the average real estate agent is about a 55-year-old woman today, right? It is an industry, both in terms of actually asset owners, right? Women own more homes than men, but also in terms of the industry, it is a female-skewed industry. And so when you say 55-year-old female, what social platform do you think of? Facebook. Now Instagram, with age demographics changing, has actually overtook it, right? So those are our two biggest platforms and where we spend a lot of time, also newsletters. And then on the B2B side, really, it's everywhere, social, YouTube, et cetera.
So you said that estate media in aggregate is bigger than any one of your creators. Does estate media itself actually matter as a brand versus the creators when it comes to the consumer? And the consumer can be a B2B or B2C. Like, does the viewer or the reader care that estate media exists?
Yeah.
Yes or no?
On the B2B side, yes.
Okay.
On the B2C side, I would love that answer to be a firm yes, but it's not today.
Why do you think it matters that it should be a yes? If the creator is sort of the face of the content.
As we grow and scale, and even on the consumer side, people have started coming to estate media independent of what creator is in that talent, knowing, right, that is going to be a content destination that they enjoy, right? That is the goal. Now, we've gotten to that point with some of our audience, but much of the audience is still coming in for the individual talent. And so what we have done very purposefully is, yes, we have all our big name talent on the consumer side of the business, but we want to introduce new formats, whether that's talent-led or non-talent-led formats, right? That audience has shown us they are already interested in, and we're taking bets on that new content. And so we want to, again, and we have good data to see this, right? If someone is coming in to watch a video with Josh Flagg and Tracy Tudor, are they staying? Are they watching other content? Are they moving into other assets, whether it's other talent in the ecosystem or, again, owned and operated series that we have that are really estate media series that feature talent, but the talent is not the core driver or brand. It is actually us. Mm-hmm. And so, again, I would say that we're not quite there yet, and we will always have series that people know about our talent. But we're moving in that direction and doing a good job and slowly chipping away.
Yeah, it's sort of going back to the Magnolia concept. Not every single piece of content is Chip and Joanna.
Yeah.
It started as that way, but if you go to Magnolia Network, you kind of know the type of content you're going to get.
Yeah.
And that ultimately allows them to disintermediate themselves
Yep.
incrementally if they want to get out of the content making business. Actually, I don't even know if they make content anymore.
Yeah, to a lesser, I mean, look, and I saw that too. Josh was my co-founder. There's inherent key man risk. Now, if you look 3 years down the line, the content with Josh is not our most engaged content. It doesn't do the most views, right? And that is success at the end of the day, right? That we launch with this one individual. We bring in other people, I would say, kind of in his ecosystem around his universe from the show he was on. But I knew that, look, first off, his show is not as big as Chip and Joanna's, right? A show on Bravo that towards the end was doing 750,000 viewers. He has about 2 million followers. The goal was never to be a Josh Flagg media network, right? That's not a good business. And so that has changed, right? And I think we've moved away from Josh Flagg is this brand, which it was at day one. This is Josh Flagg's company, to now it's Estate Media, right? And there are 30 plus voices who I constantly see on this platform who are, again, not just the top of the top. They're not just luxury. They're not just celebrity agents. We've purposely diversified away from just that archetype.
So you've got 20 plus agents and creators in the network. Let's talk a little bit about talent acquisition. How are you identifying the right people to bring into the network? What makes a good creator for you guys?
So day one, I would say it was simply people who had audience scale, right? And that was a mix. What I used from day one is we wanted to have agents that were trusted and loved. Now, what does that mean? Trusted means they sell a ton of real estate. Love means they have some degree of social scale and audience and engagement, right? Of people who follow them for one reason or another. We've stayed true to that. But early days was let's try to capture the biggest names. Most of that was people who have been on television. Others were people who had just built very large social followings organically. So that was stage one. Now, inherently in doing so, the people that have the biggest audiences are in key markets. They are selling ultra luxury. Many of them have been on television. I would still say today we are a very premium brand, right? We work with the best of the best. But over the past 18 months to 2 years, we have now brought in agents who are top of their market, right? But many of them have not been on television. My goal from there was I want the top agent in every major city in America. That person might have 70,000 followers, and that composition is 35,000 agents and 35,000 people in their market. And so we've now brought in the top agent in all of the Midwest, number one agent in Miami, the 2 top agents in New York City, number 1 in Atlanta, Dallas, et cetera, right? And have really broadened that purview, both geographically, but also, again, on the B2B side of the business, we want the best of the best. And that doesn't just mean the biggest social scale at the end of the day. And so that is where I am now. I would say we're at a point where we just signed one new talent in Atlanta and are bringing in the biggest agent in Washington, D.C., who is also a very large creator. I'm about at the point where I don't see aggressive talent acquisition on the B2B side domestically in the U.S. The international side of our business is growing materially, but I don't see me hitting a point where I'm aggressively going after new talent in the core estate media model. Now, later on down the line, and we can get into this, we launched an agency business at the end of last year where we are doing content creation for agents across the country. I think there's a feeder system there, right, where I look at it like an MLB organization, right? We have our starters, we have our pinch hitter. But if we can directly create content for agents who today don't have big scale but are great agents, we can then start building them up, right, and bring them into the ecosystem in a more organic way. You see this again in media ecosystems all the time. It's like you have the big talent, break new talent, you have better deals with them, et cetera. But that is, again, the trusted and loved is the core 2 things that still remain true today. We didn't want agents who were just celebrity realtors but didn't actually sell real estate. And that gets into the B2B2C side of the model.
What is the economic relationship between the individual talent and estate media?
Yeah. So day one, my pitch was, we are going to create original content with you. We will pay for all of that content production. And then on the back end, with that sponsored content, we will have a split on that revenue. Now, when people look at us, they say, is this an agency? Are you a talent management business, right? We're not. So we don't operate in a 10 or 20% split. We're not just going and doing random brand deals on talent social. It's all built around IP. So today I would say at our core, very honestly, on the net revenue share, right? So we take less of our production costs. The biggest talent, it's around 50-50 to estate media today, right? With other talent, I think our relationship can go up to 60% to estate media. Now, I see that model potentially changing in the future, right? Some of our talent are getting to a point where, hey, I'd rather have talent fees. Now, in that model, we go up, right? Our margin can be increased to, let's say, 70, 75, even 80%. But I'm at a point, look, we didn't raise a ton of money.
Mm-hmm.
And so if I had raised a ton of money, I probably would have taken a talent fee model right off the bat. But we share in the success with our agents. I will say our agents are also equity partners in our business. The majority of them have invested in the company, and they see every dollar that goes into the company being more valuable than every dollar that goes into their pocket, right? These are people who are making anywhere from $3 million to $15 million a year, right? And so the brand revenue that we create is a great, it could be a vacation fund for them. It could be, hey, this sends my kids to college. But very much we've aligned with our talent where the incentives are actually for them to help grow estate media and in turn for us to help grow their businesses. So that's our general model, right? 50-50 was kind of the standard to start. I think there are going to be changes in that model over time.
Talk a little bit. I don't know much about the talent business.
Yeah.
It's just not my world. Devin handled that at Morning Brew. I didn't really have a talent side of my business. Talk a little bit about this. So you have creators and these agents who are on a rev share right now, but you said that they might be interested more in a talent fee. Mm-hmm. What does that mean? Like, why would they want to kind of go to a talent fee rather than a rev share?
Yeah, so I would say in our early days, right, we weren't monetizing 100% of the inventory on content we were creating. So these agents were, in theory, creating content for free, which they'd already done in the past, right? This content wasn't monetized in the past. So it wasn't, I'm taking this big sacrifice, right, to build something bigger. And so early days, again, for the first year, I was the only seller at estate media, right? We were not able to monetize 100% of our inventory. And so part of that was, hey, I want to continue creating this content, but at some point I do want to see dollars in. Now, I would say we're now at a point where the majority of our inventory, especially on original content, is nearly all sold out, right? But still, I think we have agents who are receptive to, hey, we'll pay you X amount per episode. So when you showed up, you're getting paid that day. We're in the advertising business first and foremost. And so that comes with net 30, net 60, net 90 payment terms, right? And so if we move to that model, you'll see quicker cash to talent. You'll see more predictability, less upside, right? But again, less potential downside for talent in moving forward in that way. So again, we take a different approach. I mean, if you look at Morning Brew, our talent are not employees of the business, right? We are not paying them and then paying them some split on the revenue right after we've hit some benchmark. That's not our model. And I think people approach talent in very different ways, right? Of how they are paid, of how they are managed, of what those relationships look like. But my goal from day one was, can we add value to their real estate business and them, even outside of dollars going in their pocket from advertisers? And that's happened, right? We've had zero talent attrition since we started the business. And that's because the ecosystem, even outside of the monetization, is incredibly valuable.
But what happens if a creator or an agent does leave? What does the talent get versus what does estate media remain holding onto in the event of a
We own 100% of the IP.
And those are the shows that the talent is part of.
Shows, podcasts, etc. Right?
But not their individual social handles.
No.
Okay.
I'm not in the business of running talent's individual social handles.
How much of your branded content revenue comes through distribution through their personal socials?
Very good question. I would say from day one, we didn't have a brand. We had 0 followers. Right? So almost 100%. Now, the way we are selling, right, is let's say we'll make a 6-episode series, right? Or we will sell into an existing series. Obviously, the hack for our business is that with our talent, and now we have tons of owned and operated accounts, right? We can generate far more impressions than just estate media can deliver. So now we're at a point where I would say at the end of the day, on an average, about 70 to 75% of the impressions we are selling against an operated asset are coming from estate media, not the talent. Now that was, again, probably 80% talent to 20% estate media on day one.
Well,
right?
that's the risk.
100%. And so now when we go and sell, it is the talent, it is estate media, it is collabs on YouTube, it is collabs on Instagram. But then we're able to promote that across our entire network of Instagram pages, right? We'll have other talent that reshare that as well. And so we're able to, again, probably 3 to 4x the baseline of what one of these talent would get from it. Let's just say a reel on Instagram, just posting themselves.
Which then helps them get new followers, which helps them with their own real estate business, which is where they make the majority of their actual money.
Correct.
And so for them, you're basically covering their marketing costs for them to really grow the core business, which is selling homes.
Correct. Not 100% of that marketing cost. I will say we are not going and filming every single listing they have. I could go into the house tour genre and where I see opportunity and not, right? But that is not, no, we're not going and saying, hey, you have 75 listings here. We're going to come in and pay for this. We're going to do it through our owned and operate. We're going to use our team to do all of this. But if that listing we see is mutually beneficial, that we believe our audience will like, and also we can bring potential buyers to that, yes, we will do that.
So when you spoke to AMO back in late 2024, you were projecting $3 million in revenue.
Correct.
I think in year one, that was year two?
Heading into, yes. So we launched, technically the business launched at the start, I would say, of 2024 was year one. 2025 was year two. 2026 this year will be year three.
All right. So $3 million in revenue in year one. Is that correct?
No, year one, 2024, we did around 1.752 million in revenue. No sales team, no real employees. Last year, heading into 2024, was a shade over 4 million in revenue.
Okay, so in aggregate, the business, so you spoke to the wrap in fall 2025 and said you've made over $6 million in revenue. Is that cumulative?
Yeah, that was cumulative.
Okay, so what are you projecting for revenue this year?
So revenue this year, Q1, which is always our weakest quarter, we did 1.5 million in Q1 revenue.
Well, congrats.
Good for us. Q1 is very weak.
It's nice generally. When your Q1 is almost as strong as your year one.
That is good. Yes. I'm predicting, so I break down our business. We have our core advertising business. Yeah. That I see as a $6 to $7 million business this year. Oh. You could break that down into domestic and international. So I can share what we're doing on the international side. And then we have an agency business. I can talk to you when I think we first spoke, I was diving into an education business, which failed. And I can walk through that. We launched out of that education business an agency business where we are handling all script writing, content creation, in-person production, editing of that content, and social growth. And agents pay us anywhere from $3,500 to $12,500 a month. That business is already above $100,000 MRR. We've built the infrastructure. I believe that business by the end of the year will be a $1.5 to $2 million ARR business and growing very, very quickly. And so, look, my goal in this business is to double revenue every year. Perhaps that's aggressive, but that's where I think we'll net out at the end of this year is, in the worst case, 6 million, at the top case, 10 to 11 million this year.
So let's talk about the education business, and since you commented that it was a failure. And this is a state elite. Correct. If I understand. When you launched, $1,500 ticket basically to get in. I went to the website last night. It's I think it's like $400, $450. What happened?
It's
and what was it?
It's no longer available. So let me be clear there. Okay. What it was we have 5 of the biggest agents in America. We are going to do weekly sessions in coaching. Every month is going to have a different theme. We're going to have workshops. We're going to have goals. We're going to have challenges. There is going to be an in-person meetup every year with that community, right? Ideally, in the back end, you create a really robust community around the agents. So they're getting valuable insight. These top agents of ours are answering questions. We're having Q&As. We're actually diving into, hey, I have this listing issue. Is this overpriced? Is this underpriced? That was the goal from day one. Was let's bring them in, let's target this price point, let's have a combination of, again, great education, access that they otherwise wouldn't have. Let's have a community built, right, a robust community built, and then let's start with in-person events to bring these people together, and maybe that scales. I mispriced, number one, the offering. I would say last year was a down market in real estate. Number one, the last thing people pay for in a down market is education, even though they probably should be.
Yeah.
The education and community side of residential real estate is either very low ticket or very high ticket. You have these coaches like Tom Ferry and others that charge $7,000 a month, right, for coaching, one-on-one, weekly, et cetera. And then you have the down market, which is anywhere from 50 to 100, really built around community. I thought realistically we were going to be in that kind of low ticket monthly cost, and we're going to provide far more value. What I saw is, in the first 3 months, we drove in maybe 100 people.
Okay.
Decent business.
But not a scale business.
Not a scale business. I thought this business could be a $10 million plus business. I really did. I saw that there was value there. I saw that there was a gap. I saw how many people over the past 3 years had reached out to our talent saying, I want to learn from you. Now, Josh Flagg in 2021 launched a course, no community, static course, $1,500, made $1.5 million. It's completely changed today. You can't do that, right?
This was the pandemic where everyone wanted to just learn everything they possibly could.
$1,500, right? Modules, et cetera. No community, no in person. That has completely changed. What I saw was that we were able to drive in a fairly consistent number of agents. The engagement in the community was awful. People were paying. They weren't going to sessions. They might have gone to one session. They might have gone to 2 sessions. They had locked in for a year, but the engagement was not good, right? And you didn't have enough people actually joining these calls to make them really exciting and energizing and have that community truly learn. We saw people doing the offline work, but over time, again, it was 8 sessions a month, 2 a week from our different talent. I just wasn't seeing people coming back, right? And sure, I could have continued growing that, but I knew at the end of the year, if people weren't attending sessions A, they were going to churn.
Yeah.
This community was relatively dead. And sure, could it have been a $500,000 business by the end of last year? Could it have been $1 million business? Probably. But it wasn't what I wanted it to be. And I could have continued investing resources. We iterated a bit on price. We iterated on education within that community. We adopted different challenges, listing challenges, et cetera. But it still didn't get there. And I ended up cutting the cord. I think we did it for 6.5, 9 months. We refunded everyone, right, pro rata of what they didn't get, and moved on. But what I did see in that is that most people are talent, sure. Many of them that were in that community are number 1 or 2 in their markets. But people wanted to know about social media, right? And at the end of the day, you can tell people do X, Y, Z things. This is how you should be creating content. Here's the mix of content. Here's how you should build your brand. But people wanted hands-on advice, right, into how to create their content. And from that, what I'll say, failure, right? It was a great learning opportunity. I don't regret doing it or investing time and energy and resources into it. It lost money for the company, right? But that birthed what I'll call like our agency business today. And I think very honestly, I saw the pressure of owned revenue, right? I saw that, hey, we have this great advertising business. It's growing very quickly on not a lot of money that we've raised, but let's own that revenue. Let's own that audience. And I saw education as something we could do, and it didn't work, right? And so I moved into what I saw as a business that there was real demand for. We probably had 1,000 agents over the past year and a half that said, I need content help. Will you help me? And I think I had this stigma in my head around being a business that is venture backed, that is building enterprise value, of having any degree of agency built in, right? I definitely had that. And I think I said at the end of last year that, hey, there was real need. I didn't have thousands of people saying, we had people that said, I want to learn from you, right? But at the end of the day, it didn't really convert, right? And so that's a pivot I made. I could dive in. There are more learnings within that, but that was the core of what I saw. Again, I think we weren't priced correctly, but at the end of the day, it wasn't a good enough platform. Agents were not getting enough from it. The sessions were not structured enough. The community was not as robust, and we didn't invest as much time in community building as we had to.
So let's talk about the agency business.
Yeah.
Tell me a little bit more about what does that look like? You refer to it as $100,000 in MRR, so it's somewhat of a subscription-like business.
Yeah.
Break that down.
Yeah, so I saw a need again. Agents were making content very similar to when we launched. Agents who had to make content were spending far too much money. The content wasn't very good. They were getting ripped off. They didn't know the rates of what they should be paying, et cetera. Every real estate brokerage is having sessions with their CMOs. They're bringing in people to talk to hundreds of agents, if not thousands, of how to be good on social media, how to build a brand, how to create content. Now, how many of those people actually take that advice, right, and tactically implement it? Very few.
Mm-hmm.
Again, for an agent at the end of the day, and a core thesis behind our business is they don't have time to do it. And so we saw directly, both from what the brokerages were doing and the need there, to individual agents reaching out to us, that they needed help with content. And so very simply put, we bring agents into a program. We study their market. We look at who is in their market, what are their goals, right? Do they want to have massive scale? Do they want to be the person in their market? Do they want to be their persons their friends go to? We create an entire content plan for 3 months. Agents pay us anywhere, again, now from $3,000 to $7,500 a month. We now have people who are paying more. When each of those tiers, it comes down to how many videos are we creating? How many videos are we editing? How much in-person, I would say, guidance on a monthly basis are we giving them? What's our degree, and how involved are we in data and intelligence and kind of social growth? But we come in, we script all the videos. We're not using AI to script the videos today. It's highly market, right? We're bringing in other agents in their market. We're looking through who they are, what they have done, telling their full stories. We're editing those videos, posting them on their behalf, and we've seen incredible results.
Do they get any distribution from the core estate media brands for that?
Not today.
Is that an upsell opportunity you see?
We have some very top agents who have came into the program. So I would say we have 4 today who are people that we would work with as estate media.
Right.
So that becomes a new, not just zero cost, but profitable way to get new talent in the ecosystem and make very good content that we are creating. I absolutely see that, right? Moving forward as a way for us to get new faces, right, into content that, again, talent are paying for, but we can help build them over time, right? We have control as to how they're building their brand and know we can do it well. But no, I don't want to get to a point. I'm not selling distribution on our channels to agents that I don't think fit, again, our brand. Could we do that? Sure, it would dilute the brand today. So no, it's just us creating content for their socials. We will go and create them if they don't have it already. YouTube Shorts, we'll create them Facebook pages, we'll help them, et cetera, on different platforms. But today it's just creating content for their individual socials.
How do you think about margin for that part of the business?
Yeah, so day one, I actually brought in a partner to do it with me. So they had built similar almost to what Alex Lieberman was doing early stages of creating content for executives, right? They had that for video. I had known these guys for quite a long time. I didn't have the infrastructure in place. I said, we'll do a 50-50 share. You essentially handle the entire back end of this business. Low risk for me, right? I hadn't built that type of ecosystem. In the past 2 months, we've moved everything internally.
Okay.
Script writers, video editors, kind of a head of that program who's handling the operations. And so that margin for us now today is around 70%. As we grow and operationalize it, I believe that can be an 80% margin business.
So for $3,000, how many pieces of content is an agent getting in a month?
8 videos a month.
So you can generate 8 videos a month for under $1,000 in cost.
Correct.
How?
So at the lowest price tier, let's say $2,500, we're introducing a $2,500 price tier. We are not sending someone in person.
Okay.
This is all virtually recorded, right? So we have models where we have contractors we essentially pay. Some of them are full-time, some of them are not, on a per script and a per edit basis. We understand those fixed costs, right, against that cost of production. And they're very good, and we're doing it very well. So our team is coming in and handling all the brand guidelines. We're handling the talking points. We're studying their market, and then we're essentially turning that out. Now, on the higher price tiers, we are sending someone in person, right? So let's say in any market for a shoot, right, we'll batch content. So we'll create it all in one day for 2 months. That cost is generally, depending on the market, anywhere from $400 to $800 for the fixed cost of the video. Everything else is then variable depending on how many videos we are creating for them. So again, at a $5,000 price tier, right, or let's say $5,500, we have $700 in fixed costs against that asset. And then we have, again, very good margin and fixed costs on the per video basis, both with the scripting and the editing.
So let's talk about really the core business, which is the advertising or sponsorship business. Walk me through what this looks like. What are the products that you're kind of selling to advertisers?
Yeah, so I'll break it down in three ways: the B2B, B2C, and then the international side of the advertising business is how I look at it today. On the B2B side, we are selling newsletters, right? So simple newsletter integrations. We are selling podcast integrations.
It's like host reads,
et cetera. We also then are creating what I'll call, where the most of our money is made, is like, you could say it's built if sold, but it's original branded content, right, for a brand. So that is bringing talent together. That is actually creating perhaps new IP, right? That could be short form focused. It could be several long form episodes. And then sponsorship of existing video IP, right? So sponsorship of existing video IP, that could be a 30-second ad read, right? That could be a sponsor by, presented by, that could be a more natural integration. And then custom IP we are building right on the B2B side of the business.
How involved are the creators in the actual ideation and ultimately creation of that content?
It depends. Some very involved, some not involved at all.
And how do you decide, like, why very involved some cases, why very not involved?
That comes down to A, how involved the talent want to be,
okay,
and B, right, are they creative in that way? Some agents want this to be a one-stop shop, right? So they want us to essentially come up with the entire creative, work with a brand, and then say to them, here is where we are, and get their sign off on that. Sometimes they'll have questions. Other talent want to be involved from the early stages and working with us and conceptualizing it, right? More creative in nature. That's really what it comes down to. Yeah.
They ultimately have final say as to what they say?
Yes.
Has that introduced any sort of complications? Have you lost deals because, like, you guys wanted them to do X? What do you do in that situation?
We have a very good idea of what talent want to do and won't do, right, at this stage. I would say when I said yes, I was earlier on in the company. We have an idea if a brand comes in, we want to make sure that that brand is actually true to who the agent or creator is, right, at the end of the day. We have brands that come in all the time that we pass on because we just know they're not a fit for our audience. We have a very good idea now of what talent want to do, what their brands are, what advertisers they want to work with, what categories they want to work with, what categories they do not want to work with. And so now we're not saying, we really haven't had an issue in the last year.
When you spoke to Christiana back in late 2024, you said you think this advertising business can get to about 20 million in revenue.
Yeah.
Now that you've reached, you're projecting, I think you just said 6 or 7 million this year in advertising. Is 20 million too low? Is 20 million actually too high? Like, what do you think now?
I think it's too low because of the emergence. And I just spoke about the B2B side of our advertising business. Because of the scale and growth of our B2C business and our international business. I would say when Christina and I last spoke, again, and when I shared with you, the majority of our revenue was in the B2B business, which I believe would have been capped at, let's say, $12 to $16 million. Now the B2C business is much larger than I ever could have imagined. In the international business, which I didn't even have top of mind, right? When we spoke, we had done nothing. Likely will be bigger than the B2B business in 2 years, if I'm being fully honest. And I can dive into what that international business looks like. But yeah, that's why it's changed and why I think the ceiling is actually much higher.
So pull that thread. What is the international business?
Yeah, so to start, we worked with the largest private equity fund in Europe last year, starting in Portugal. They saw an emergence of people in the United States, whether they were unhappy with the current state of the country, the administration, wanting to buy second, third homes, right, in Europe, or even primary residences. We've seen this. People coming in. Portugal had the golden visa, right, where if you put X amount of money down into property, you became an EU citizen.
Yeah, and you have the healthcare that's there, and you have just the quality of life.
And we've seen this. Many of our agents in New York have had clients sell their homes. One of our agents here, Jeffrey St. Armand, he focuses on Brooklyn. Last year, he had 5 people move from Brooklyn to Portugal. Right? Cost of living, security, whatever it might be. It's a very hot destination. And so we came in with that partner and said, we are going to create original content around Portugal. They own more residential real estate in Portugal than any one entity. They're also massive holders in Italy and Spain, et cetera. And so we came in, we brought our talent, we created original series around Portugal, right? Number one, an awareness play. Number two, a conversion play. And so what this allows us to do too is in the US, we don't take any percentage of our agents' business, right? We know we have driven hundreds of millions of dollars of sales for agents. We're not in that business, right? And so what this allows us to do too, though, is new development is sold differently, right? Where generally speaking, the agent gets a cut. We can also be involved in the back end, right? Economics of actually selling property through our owned and operated. And so we're going in, we're creating content, we're aligning talent, and we are essentially building campaigns for them around individual developments, whatever it might be, right? To understand and bring Portugal both as a second, third home destination, but also an investment opportunity to our audience. And that model scales incredibly well, not just across Europe, but around the globe.
So the PE firm, Aero Global,
correct,
they own a bunch of real estate. We'll focus on Portugal.
Yeah.
They already own these homes.
Yeah.
And so they are basically, are they for lack of a better phrase, like kind of a glorified advertiser? Like, are they underwriting the creation of this content and putting their brand against it? Are they asking you to come in and do like, hey, look at these 7 properties. Let's create content about these 7 properties. Like, is that the model?
Yeah, a mix of both. So some of the properties are already completed. Some of them are in development.
So they're a developer.
They're a developer.
Okay.
They own hotels, et cetera. And so the goal from first, let's just drive people to this destination.
Right.
The hotels, the golf courses, they own the marinas, right? They own the entire ecosystem around the real estate. So let's tell that story, right? Yes, it's an advertising relationship where they are paying us X amount of money, right? To go out there, to have crews out there, to bring our talent out there, and then have that distribution live across the state media and our talents pages. There's also a back end to those type of deals with developers, right? Where when we bring people in, we had a very concentrated kind of top of funnel play of how are we actually managing top to down funnel, right? Of getting people in. But when we are directly selling properties, right? So our talent sells a property, we sell a property through our owned and operated. There's a back end on those deals, right? That can be anywhere internationally from 2.5% to 5% with new developments, right? And so sell $1 million home, it's a pretty good business. We're advertising $20 million homes and $30 million homes. So that becomes a very lucrative business as well.
The talent that you have, is it net new international talent, or is it your American-based talent?
American-based talent. This is not new, right? You've seen that international developments have largely used American mega agents to come and essentially be the face of those developments, right? Sirhan does it a ton, but agents across, the US are going, it could be anywhere. It could be Hawaii, it could be the Caribbean, it could be Europe, right? And they are essentially becoming the US face of that development and of that property. You see that in the US too, right? These brokerages fight all the time to be the brokerage that is attached with a new development. And so similarly internationally, right? You have had our talent be paid to simply go to these new developments in other places. We're taking it another level, right? And it comes down to we reach across our B2C side a very high net worth audience. We understand them, right? We reach a lot of people who are prospective home buyers, and we have the data to support that as well. And so just taking, let's say, Aero Global, right? We drove 30,000 people to their landing page, which had information about the property to book a call. And of that 30,000, we had around 2,000 people book a call, right? Many of those people going to the country. And if you say, let's say this advertiser spends $1 million with us, they need to sell 1 home, potentially 2, depending on the price, to make that money back, right? So it's a very good business where if we're able to have 4 home sellers, we sell one $15 million property for them, right? Not only are they recouping their advertising spend, in that advertising spend too is good IP that they can then use to actually go and sell the other properties. So it's a business that is very much aligned for our agents, for us, and for international developers that is scaling now very quickly and outside of just Portugal.
Have you sold a home?
Not yet. The sales cycle is incredibly long.
Yeah. Especially because the places aren't built yet.
Yeah, so the sales cycle is very long. A lot of these people might be hearing about Portugal for the first time. We have brought many people that are planning now in the summer to travel to Portugal, right? And part of that is how do you have the in-person sales funnel and in-person sales cycle. Um, but most people, if they're learning about Portugal for the first time, they're getting on a call. They're saying, I want to come to the country. I've never been, right? So that sales cycle, I would say generally 6 to 18 months,
Yeah.
right, overall. But a lot of interest.
So Arrow Global's got Portugal. You said they've got Italy. They've got a couple other European countries.
Yeah.
Are there like PE firms in other parts of the world, or are there other where other places are you looking to do these sorts of deals?
Yeah, so developers, massive developers right across the world. I mean, that could be we've had conversations in the Caribbean, in Hawaii, still in the States as well. Conversations in other countries in Europe, in the Middle East. And so that's anywhere from foreign governments, tourist authorities, to individual property developers, to large funds, right, that own a material amount of mixed use or residential real estate. And so I would expect we will be doing work in probably 2 other countries this year, likely moving into the Middle East and also into the Caribbean.
So sales cycles are long for this.
Yeah.
You have strong belief that you will move properties.
Yeah.
2,000 phone calls off of 30,000 people hitting a landing page. Theoretically, you get a conversion. That's a success.
Yeah.
Is there a point in time where you go, this is not a success, and you realize, is it 18 months from now when you haven't sold a home that you go, you know what, I was totally wrong? In the worst case scenario?
Yeah, I think, at the end of the day, if we're not able to move product, right, an advertiser won't come back and want to do more, right? I shouldn't say an advertiser. I should say a developer,
right,
property owner won't want to come back and do more. I'm very confident in these early numbers. This is the first time we've done this, right?
Yeah.
And it came about fairly serendipitously. So I would say I'm very confident in these early numbers and what that looks like. We will be doing a stage 2, with Arrow, but I think this was always targeted as an awareness campaign. And then over the months, we kind of, again, moved it into a more top of funnel campaign driven towards conversion. So part of it is telling that story. But yes, I think at the end of the day, if we're not moving property, it is not successful at the end of the day. Now, some of these builders want awareness. They want people coming to their hotels. They want people coming to the countries. They want people buying goods. So there is indirect value in that, right, as well. But ultimately, yes, at the end of the day, if we're not moving property, I don't think this is a successful model.
So let's assume, because I would be lying if I didn't think you were going to move property.
Yeah.
I've even thought one day maybe I'll move to Portugal. I went to Lisbon once and fell in love with the country. Now I'm nowhere near in a position to do that, but maybe one day.
Yeah. Likewise.
It's just a beautiful country.
Yeah.
And a kind people. So, you build this international business. You said you think it could be bigger than. Maybe I'm putting words in your mouth, the branded content side of the business.
B2B side.
B2B side. All right. Yeah. How big can that business get theoretically?
I think that can be next year, right? I'll go kind of short term and then longer term here. I think if we have 3 partners, those are generally 7-figure plus upfront deals. Right? There's travel costs. There is a lot there. And then the back end of those properties is obviously the much bigger, right, side of this that I can't give you a concrete answer today. But even if you're looking at 3 developments in a year that are 7 figures plus, you're looking at a fixed, right? Let's say it's 3 to 5 million there. And then you are looking at what does the back end of these properties actually look like, which in a given year could be bigger, ideally, than that $3 to $5 million piece. Look, I think this could be a $20, $30, $40 million business, right, in steady state. But I'm not there yet, right? I have conviction, but I don't have enough conviction to say that we can turn this into a $100 million business. I think I will by the end of this year. In success, I do want to see how much property we move, but I think it can be a very, very big business for us. And I'm very confident in that.
So 7-figure deal, one of is the start of this partnership. Then you've got the kind of the back end if you move property.
Yeah.
is there like a minimum guarantee, sort of like the developer has to recoup the $1 million before you get the back end,
No.
or it's million, let's say million plus back?
Correct.
How do you split that with the individual creators?
Yeah. So what we do, right, and how we sell generally is we put together essentially an entire media plan, right? Some of that is creators going out there. And against that is how many impressions are we going to generate from those individual creators? And then we essentially handle it pro rata. So how much is coming from estate media? How much is coming from the talent, ensuring the talent feel all of their accommodations are paid for, right? And they are being paid obviously for their time going there and for their distribution. Some of that, right, and some of that content is purely on estate media owned and operated that we have 100% of, right? And so that's the way we break it down. There is complete transparency with the talent of here is this broader deal, here is your piece, and this is how essentially we're getting to that point, right? We've never had issues there. Very transparent as to how big this deal is, what your part of this deal is. And I think that helps too, that all these talent are part of the business, right? Like they are equity partners in the business. And that does mean a lot to me. There's a lot of trust within that. And so that's essentially how we do it today, right? Talent are getting paid, talent fees covered, right? Travel covered. They'll go generally for 2 days.
Mm-hmm.
We'll film content. We'll do tours with the property owners. We'll bring in potential, domestic buyers who might come out when the talent are there, and then they're back home, and we handle all the back end.
And then on the fee side,
yeah,
are you able to track at the individual creator level which creators drove?
Yeah.
How does that work?
Yeah. So today, very simply, right, we just use Bitly links or tracking links to know where they came into the landing page. As part of that sales funnel today, we had a how did you hear about us, right? So they can select the individual talent, et cetera. And then in that sales cycle as well, right, we ensure that we're properly attributing who that comes from. So that's the way of doing it today, right? Overall, but also in this, right, some people are going to those landing pages. Many people are directly messaging our talent as well, right? And so we're able to track that through just our back end, right, to ensure that that is, again, properly tracked.
Is there a point in time, so you said international will be bigger than B2B. The consumer business has already overtaken B2B. You are more of a consumer business now than you are a B2B business. Is there a point in time that you think the B2B business just doesn't make sense to do anymore?
No.
Why?
Because at our core, we are working with real estate agents, right? They are realtors. That is their core business. And I think that the B2B business, I think the advertising piece of it is still going to be a really nice business. I think it is a critical part to the entire flywheel of who we are. And I think that even with our agency business today as well, that is a B2B business within that, right? I very much still believe that we need to be covering the B2B side of this business and that our talent need to be speaking about what is happening in the industry, right? Simply moving into B2C is not who I want to be, right? I still want to have that presence of being the most known video brand, right, for real estate agents. That's very important. And that also is a critical part of the entire flywheel of this company. So I don't see us ever writing off. I'll say confidently, I would never write off that side of the business.
So I want to talk a little bit about the macro of real estate in general.
Yeah.
In 2024, the era of the 6% commission sort of came to an end with a pretty big, I think the association lost a lawsuit. Basically, like they couldn't mandate
tons of lawsuits.
Tons of lawsuits. Basically, they couldn't mandate that the commission was a flat 6% just across the board.
Yeah.
And you know this better than I do. I don't even own a home.
Yeah.
All right. But that theoretically cut agents' comp pretty aggressively, right? Now, you kind of launched right around the same time of that. Did this have any impact on your business?
Yeah, so you can say it compressed theoretically. If you actually look at the data, it almost hasn't compressed at all.
Why is that?
So in practice, agents are still going out, right, and doing 3 and 3, right? Maybe they're doing 2.5 and 2.5. That's been happening, right? It depends on the sale price, et cetera. But I think the underlying economics of real estate, right, is that, look, many people will still say real estate agents are overpaid, right? That a lot of this can be done through AI, et cetera. I disagree. I don't agree. I don't believe that. I think that bad agents and the agents who are not very good at their jobs will be replaced, right? But I think good agents who deeply understand markets, who are negotiating prices, who understand what price and have a network of people, of buyers and sellers, and are driving those people into houses will never go away. I think time will tell, right? I mean, the macro environment, not just with interest rates, but what's actually happening within this industry today has changed dramatically in the last 6 months, right? Brokerages are now, Compass is suing Zillow, right? Compass, I mean, there have been lawsuits across the board. Brokerages are getting sued, et cetera. Now Compass bought Anywhere. It's the largest publicly held real estate brokerage of all time, right? They have 260,000 agents. Might be a bit more than that. They're now competing with Zillow. They're competing with Homes.com. They're competing with Rocket Mortgage to have their own portal company. Then Compass strikes an exclusive partnership with Rocket Mortgage that their pre-listings are going to live on Rocket and Redfin. And then you see the other brokerages. Some strike that deal with Homes.com. Some strike that deal with Realtor.com. Some then strike that deal with Zillow. And so you're seeing this massive shift, right, in the power structures of brokerages versus the portals, right? And we're in the very early innings of this. And so, yes, I mean, we launched this in, again, I would say the core advertisers in our space and also the traditional publishers in our space, the year we launched probably saw a 50% dip in their business. But I have built this relatively successfully in a very tough macro climate in residential real estate. And again, if interest rates are cut and the industry is humming, very quickly our B2B business could be bigger, right, than it is. But I say that today knowing that interest rates are high. Now there's a new Fed chair that comes in, right? Let's see what happens over the next 12 to 18 months. But it's certainly, we've had to grow. But again, I'd say we had the benefit of there was only up, right? We couldn't go down from launch. But the industry is changing very quickly, month by month. And we have to be very cognizant of how that industry is changing, right? And where those marketing dollars are being spent and where agents, right, are now finding their allegiances and how they are working within this industry. But it's very quickly changing.
We're in this era of AI where almost every media company is thinking about AI, like defending themselves against AI.
Yeah.
Now you're a talent-led business, which should theoretically protect against that to some extent.
Yeah.
But the big channel that a lot of media companies are looking at to do that is events. Mm-hmm. You mentioned events earlier tied around the education business. Mm-hmm. Beyond that, have you thought about events as a line of business, or is it something it just doesn't make sense for you guys?
Yeah, so I listen to almost every one of your podcasts and people that have built incredible events businesses. My view of it today is that you have several companies in this space that have been doing events, notably Inman, for around 20 years. Now, the big difference, I would say, in residential real estate, as it's opposed to other B2B niches, is that every brokerage has anywhere from 4 to 6 events per year, including one hallmark event, mm-hmm. right? So Remax will have their event, maybe 15,000 Remax agents. Keller Williams will have their event, 20,000 people. Compass will have not just their annual events, but regionalized events and local events. So that's really where the marketing budgets of these brokerages are coming into play. So you have agents that are already going to their local market events, or going to their regional events, or going to their national events. They might then be going to non-brokerage affiliated events. But what does that actually look like? How big of an opportunity is there? Now, other companies have launched different events, variations of events. I see a lot of success in what I'll call more kind of micro, 100 to 250, maybe 300 people in a smaller, kind of more intimate gathering. But going big and trying to compete on a scale basis with the brokerages won't work. First off, those brokerages, for the most part, are also paying for their agents to come to those events. They're networked around 15,000 people in their own brokerage. And so I think a large events business purely targeted for real estate agents will not be successful. You've seen the companies outside of the brokerage that have also seen decreases in attendance. Part of that is how much money are agents making, right? And when that goes down, there's less money to go to events. And so I don't think that I am completely saying no to events, but I have a very pragmatic view that trying to go big in events in this industry is very, very difficult. Will we do smaller events, more experiential things down the line? Yes, I think that could be part of the strategy. But no, I don't see myself going really big, right? And look, I've thought about it. Can we bring all of our talent together in one place, and how many agents could we actually drive in? I don't think it's as much as you would think, and it's for the underlying dynamics of how the event space is built today. Where again, the brokerages really do have a relative monopoly over events, right? For the reasons I outlined. So that's my view today, and where I see it. Look, perhaps I'm underselling myself, and that we could have a big event, but I don't see it becoming a $10+ million events business for estate media. I don't think that's possible.
So what comes next for estate media? Or is the business as it looks today sort of like not mature, but like the state in which you want it to be, and now it's just scale each of these three lines of business?
I think today, for I'll say the next 24 months, it is heads down scaling these three lines of business. Like, we're still very early on, right? There are still much more content we are making. I mean, even on the B2C side, we have a series coming out next week that's an athlete home series sponsored by Polymarket. We're doing a big series reinventing one of our talent in Atlanta, Georgia's homes, right, with Container Store and Floor and Decor. We have a series in LA that's around a big interior designer looking through celebrities and where they first lived and where they live today and how design is a part of their life. We are still in the early innings of the original content I want to create in both sides of the business. We are still in the early innings of our agency business, right? Relatively newly launched in the international business. And so I really want to grow within those three verticals because we are not close to even being 50% to where those businesses can be, right? So that's my core focus today. Now, again, I think as we start looking at year 5, year 6, where does this go, right? And it gets down to, are you a seller of this business? I mean, we have had acquisition offers. I think this is a very valuable asset when you look at the fact that we have 75 million people that follow the entertainment side of the business that are interested in real estate. We drive 1.5 million clicks to listings in a given month. And then we have more agents that follow us and the most trusted agents in one ecosystem. It's a very valuable strategic asset for companies in this space. So I don't know, right? Once we hit that point of scale, it comes down to, are you a seller? Or again, are you a buyer? Do we buy a technology company? What does that look like? Do we get into that space? Do we continue with these three lines of business? But again, I would say when I'm looking at our kind of 12 and 24 month planning, it is heads down in these three verticals of the business, which are still all very early.
Would you prefer to be a buyer or a seller?
I don't know. I would say today there aren't a lot of things that I find very interesting to buy. I think if you asked me 18 months ago, I think there was a very opportunity to be a buyer of a tech solution for the residential real estate industry. I think there were a lot of great companies that didn't have top of funnel, didn't have marketing exposure, right? But were very, very good products. Today, I see that being incredibly hard. And I want to give it a few years to see kind of what happens here. I think a majority of property technology, which is an industry that in 2020 raised, $35 billion, $50 billion. And my pessimistic view is a majority of those companies are going to struggle and probably go out of business, right? Just the reality of what it is. Most of these businesses, there will be successes, are essentially wrappers or now essentially AI-fueled products that are wrapped around here are a few things we do for residential real estate agents. But I think we're getting to a point where that's difficult. So very honestly, if I were to tell you today, I'd say probably a seller rather than a buyer.
What are the big risks for estate media right now, and how are you mitigating them?
Yeah, I would say there are always inherent risks in the talent business. Talent leaving, talent not wanting to create content anymore, what that looks like. I think we've de-risked in that way by having a wide enough talent purview and talent ecosystem that we're de-risked from any one talent having an issue or leaving. Day one, there was massive key man and talent risk. I think other kind of fundamental potential risks, core issues for the business is we need enough owned and operated strong content and continue to build our brand where we don't become just a branded content house.
Mm-hmm.
That's a key issue, right? And
I'm sure you talk with Devin about that a lot.
100%. And I think I'll say we haven't raised a lot. We've raised 2.65 million, right? We are profitable now. But we're still not at a point where I am able to go and invest 7 figures into content that I'm not looking as monetizable IP. We've gotten better. We've started building our own series that we will create whether or not they are sponsored, and now there's sponsor interest. But I really don't want to get into this business where, yes, I've talked with Devin a lot, who is an investor in our business, that we can't have 70% of our owned and operated original content being sponsored series.
Right.
I don't want to get there. You lose the integrity of the brand. And so that's something I'm very cognizant about and see as a risk, because at our stage, continuing to grow quickly, trying to double year over year, it's hard to say no to very big brand dollars against content, right? So that's something I think a lot about, and I think is not necessarily a near-term risk and will not be a risk when you look at our P&L, but is a risk that we start alienating the audience of estate media, right? That is a challenge. Other long-term risks, right? I think that where the residential real estate industry goes, right, is a potential risk. If you look at some of our core advertisers, it's the major portals, it's the major mortgage companies. I think if those businesses are incredibly challenged and lawsuits continue to happen, that you see a pullback in advertising spend, right, from the core endemics in the category. That's a risk. It's part of why I've leaned pretty heavily right in the B2C side of the business. 2025 was very light in terms of those mega player spending. They were trying to win the PR war, but they were doing so. They're really trying to settle lawsuits, right? At the end of the day, now that's changed. And so again, core risk, sure, talent, there's always going to be risk in that. Number two, I would say, and perhaps top of my mind, is not just becoming a branded content vehicle that dominates who we are as a brand. And again, number three, I think where the residential real estate market goes, right? Could it get better? Yes, but I think it could also get worse. And so we are tied, I would say, to macroeconomic trends in some ways.
Is there a risk that the agency business becomes too big?
No. And I say no because I currently have that business run entirely outside of my core team.
Okay.
Now, I would say yes if today that business started blending into our core estate media business with our W-2 full-time employees, right, in that business. I've purposely built it myself, and I've built it so that our team, for the most part, is not actually involved. Now, perhaps you're asking that, okay, does that business become so big that it's much bigger than all of our other businesses, right? And we're like, hey, we're doing $20 million a year on this business, right? It's 70 to 80% profit. How much of my time should be going into this versus the much harder side? But no, I mean, I think that would be a good problem to have at the end of the day. I think, again, we can run that fairly independently without it diluting the core brand. And I actually think that that can be the really strong feeder system where we can be a media company that doesn't just take existing top talent and make them better and build audience around them, but takes talent that could be discovered and actually breaks talent at the end of the day. And that would be fulfilling for me. And I think it's a very good business. And so I don't see that being a risk today.
Could it be a risk when the time comes for you to be a seller?
Yeah.
How do you think about that when it comes to balancing the percent revenue between the different lines of business?
So I think if you are selling to a strategic buyer versus, let's say, private equity, I think there are very different concerns for a media company. I think if we're selling to a strategic buyer, actually having a massive amount of agents paying us money is very valuable because there's opportunity for cross-sell. There's even a variation of this where, and I've had this conversation, where the agency business becomes part of, let's say, a larger business. It could be the real estate portals, right? How those companies make money is they sell products to real estate agents. That's a very natural synergy. On the private equity side, I think, look, if you're looking at a highly accretive business that has incredible profit margins, right, that continues to grow year over year, I think that's actually beneficial. So I don't see it being, I mean, I think if we were to build a technology product, it could be. But yes, I mean, I've seen a world in which a strategic buyer comes in and takes our advertising revenue to zero, right? And essentially uses us as a talking piece for whatever their business is. But I actually think the agency business, if it's too much of our revenue, I think that is unattractive, right? I don't want our agency business to be 70% of the revenue of this business, and it never will be. But also from an enterprise value perspective, I don't want that to happen.
I want to end with the same two questions I ask every operator that comes on the show.
Yeah.
first for media operators trying to figure out where to place their bets right now, what's the one thing you'd tell them to focus on?
I have a quick top of mind answer, but I want to think about this a little bit deeper. I've always been very bullish on niche building, right? At the end of the day, I think there are a lot of still untapped, whether it be psychographic or demographic groups that are not being properly served. And I think there are incredible businesses to be built around that. I'll take one example. I'm sober. I got sober when I was 21. You're looking at a group of people who there are 3 million people in Alcoholics Anonymous in the United States, about, let's say, 20, 30 million globally. I'm underselling those numbers. You have a business where people, it becomes perhaps a bigger part of their identity than anything other than religion, perhaps their work or parenting. Highly underserved market, number one, right? With very strong audience and people that ascribe a lot of their personal value to that. Number two, massive endemic advertising category, NA beer, supplements, et cetera, in a growing space, right? And number three, a multimedia business where you could create incredible content. That's an example, right, of where I see, okay, this is a business that is underserved, has a group, whether it's B2B or B2C, that strongly ties that to part of their identity. There's a very clear day one advertising component and something that can be monetized in community in a lot of other ways. So there are a lot of niches out there that I still see that are highly undertapped. Number two, I think what we didn't talk about, but is clearly taking over is clipping, right? And how that evolves, right? I would say that live streaming probably a year and a half ago would be the place I say take your bets there. I would say TikTok Shop would probably be the other place. I still think TikTok Shop and the affiliate world being created around that's an incredible solopreneur business in this space. But I do think if you can properly leverage clipping, right, and do it in a way that is not disingenuous, but you can essentially have a CPM arbitrage business that is highly lucrative. It's not a space that I would want to build in, but is a space you could build a very big business tomorrow. And I think just to extend that a little bit, right? Essentially, you're seeing clipping be the only unregulated today, one of the only unregulated advertising industries, right? Where you are paying people per view to create content for you. There is no disclosure that this is paid for content. When I post something on Instagram, I have a partner tag, right? I have to follow FTC guidelines. It is essentially the Wild West, and you can manipulate and draw attention. You're seeing this in the political world right now, right? All of these candidates are spending tons of money clipping, but you have an ability today to influence. Now, I could say this probably isn't great for culture or society. I actually do believe that. I don't think you should be able to do that and not disclose it. But there is opportunity to go from 0 to 100 in a way that we've never seen in the past. And do so not constrained by guidelines, not constrained by hashtags, not constrained by paid partner logos, where you can build an individual or a collection of individuals faster than I think you ever have been able to in human history. Now, again, would I do it? Is there kind of some ethical kind of gray areas there in terms of what clipping is doing? Yes, I think that it likely should be regulated at some point in time, is my opinion. But that today is the biggest opportunity, in my view, in social media or in media overall.
And the second question is, in your life, what is something that you are absolutely obsessed with right now?
Professionally or just overall?
Whatever you want.
My passion for, I would say, the last 10 or 12 years, I love horses. I have 2 horses. That's awesome. Myself. I love them to death. And I actually think, going back to your last question, I think there's a very good media company to be built around equine.
Have you looked into the equine network?
Yes, I think you have. Yes, very good. But I think there is actually a social first business to be built around it as well. Look, I think, yes, for me, I'm obviously that's a love of mine on the personal side. I am truly, though, I would say, obsessed with media, social media, et cetera. I spend probably 2 hours at night watching content, studying content, different formats, creators that are growing, creators that are blowing up, where are their businesses, what's working and what's not. I can adapt some of that into estate media, but it's something even dating back to when I was 19 or 20, right? And OTT was coming out. I study these trends, and I think it allows me to be ahead of where things are going and not behind. And so, yes, I would say I consume essentially every piece of content, every type of content in every niche, right, to study. And that's something I'm fairly maniacal about. And I probably spend 10 hours a week doing that.
Well, thank you so much for coming on the show.